Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. As we record this on a Wednesday, it is Valentine's Day. It is also Ash Wednesday. So encourage you, if you can, go get a steak, because it is a very popular thing to serve the love of your life, is a great steak dinner. And we're going to talk about what the heck is going on in this cattle market. A lot of red on the screen and definitely not love for the Valentine's Day holiday. Brad Kooima joins us. He is with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's just talk about this market at the moment. Is it a train wreck, or is this just a little bit of a curve in the path that we're going to?
Wow, that's quite a wide parameter that I got to decide in between. Susan, thanks for having me.
I'm there for you.
Yeah, that's fine. I mean, it's like the guy said, "Wake up, Homer!" And you've never seen a wreck like this one. That's not where I'm at. That's not right. Where I think the market's at, Susan. However, we've never experienced volatility, I don't think, like we've had here in the marketplace the last while. We just finished off, a $23, $4, $5 rally on live cattle, even a little more than that on some of the months of feeder cattle. So yes, volatility reigns. And when you go up that fast, I got an old Post-it note among about another 50 of them, but one of them in here somewhere says up on the stairs, down on the elevator. Unfortunately, that's often where futures market work. In other words, the rallies seem to be more gradual and the sell-offs seem to be more steep. So where are we really at here? We got overbought. Okay. Started the correction last week, Friday, Monday, Tuesday. We started the correction Monday, Tuesday. Now today is our third day down against an uptrend, which is a little disturbing. But as I'm watching here, the waning moments here, we are coming back some, and the forward spreads are acting a little better. So instead of being, 220 lower April, we're 100 lower April. So it's a little encouraging that we're trying to stabilize it. I think there's some issues with the fundamentals of the market that maybe are a little more medium range. Let's talk about the here and now a little bit first. Cash market last week was awesome. 182 in the south, 182 in the north. It all happened quite late after the close. We come in this morning or this week feeling, pretty confident until we had this, $2.5, $3 break in the futures, took a little of the edge off. And that didn't help today because there was some trade in the south at 180, which was too lower. Now, right here, the trade hasn't happened yet. I think 180 to 181 is a layup. I think we can get that on the right kind of cattle. We're going to see if we can't get a little better than that yet. At least that's what I'm hearing so far. Those bids are being passed with asking prices at least steady, and in some cases asking a little higher than last week. So one thing that's happened here, Susan, that's worth talking about is we've changed the structure in terms of the basis of what for a while there we had a big premium, and now we're more normal, I guess, if you want to call it that.
So you and I were talking before we started this program, and I know that the temperatures are pretty decent now. We've had some struggles with these cattle, but feed for the most part is cheap. Do you hear a concern out there that we could be doing some overfeeding because, hey, we're going to wait for that bigger dollar to come off that truck?
It's the gorilla in the closet, Susan. It's a great question. And not to be an alarmist here, but okay, obviously a little bit of hair I've got, it's gray. I've been through these things before. What happens when you get into a deal where people start fighting the market? Well, typically you've got futures are at a premium would be one thing. Well, we've had that. It's not as bad as it was. That's why I brought it up. You've got people that have cattle that are a loss. In other words, what we're getting for the cattle is much below break even. Most of these cattle right now break even way above 190. You might have cheap feed, which certainly corn is a lot cheaper than it's been for a long time. Mm-hmm. Another influencer sometimes is, well, feeder cattle, are they a good buy or are they a bad buy? Are they a good trade? You know what I mean? Sell these fats at a loss and turn around and buy some cheaper feeders. Well, that's a struggle too because feeder cattle are high. So yeah, there's the recipe. There's all the ingredients. Now, is that going to all fall together for, something negative? But here's what I'm struggling with more than anything else as a fundamentalist here. Okay. So year-to-date slaughter, it's February 14th. Year-to-date slaughter is down almost 6% from a year ago, 5.9. If you remember October, November cattle and feed reports, that especially that October one, that was such a wreck. That yeah, it's a family show.
Family show.
And switch the whole narrative to where, okay, now we decide, oh, it looks like we got more cattle in the first quarter than a year ago. That's what, the catalyst banned that whole big sell-off. So, okay, so if we do have more cattle than a year ago, and hey, who's to say that the USDA is perfect? They're not. They know that they're doing their best, but it's happened before that the numbers are off, right? But if they aren't, and then we're killing 6% less when we should be killing 2% more, I mean, yeah, we had a big snowstorm. We had really crappy weather. So maybe we back cattle up. We certainly took a lot of weight off of them. I don't know. I wish normally I give you more of a, this is what I think. And, and I'm dumb enough to lay it out there. But is that bearish today? Probably not. Could it be bearish in 30 days? That's what we got to be careful about. So let's stay current. That would be my admonition here, I guess, out of the whole thing.
So what about, you talked about show lists, and you were saying that the show lists are lower in Nebraska right now. What's your takeaway on that? Well,
and in Iowa, they're not a problem either. And the weights are not a problem either. So after that whole long bearish narrative that's got everybody, out there on the window ledge now, if that was the case, why would the weights be at or below a year ago? Doesn't feel like we're backing them up. Why would we have show lists that are not a burden at all, in fact, smaller? So I just don't think that the northern deal, especially what we would call the north, I-80 and north, I don't think the problem is there. And I'm not positive that the problem's in Texas either. I'm not connected nearly as well as I am up here, but that would tell me, and in a good market, the north should be premium the south, which I hope that's what ends up how we're going to be this week, which would encourage me. If they're going to be 80 there, we should be 82 or 3 up here in the north with less cattle and better cattle, by the way, too. So we shall see.
And finally, I wanted to, as we wrap this up, kind of talk a little bit about consumer confidence. We saw CPI numbers come out earlier in the week. There was a reaction not only from the grain side, but obviously from the livestock side as well. And then we saw the stock market not helping as well on Tuesday. Folks got to buy their proteins. Now we're headed into the Lenten season. So there's a lot of factors that could work against this cattle market.
Sometimes we're our own worst promoter. I got into a social media peeing contest here the other day about, what are we going to do when the consumer backs away from this beef? They're not going to be able to afford this beef, and it just drives me nuts. I mean, so I just got done yesterday looking through that whole complicated 7-page long retail price of beef at the 13 major cities in the United States by cut. If you go to Ruth Chris's, you're going to pay a lot for a steak. You would have 5 years ago too, and 10 years ago. I mean, but the retail price of this beef, and the only positive thing I know of that came out of COVID is that we changed that whole paradigm of, we taught this Gen X or whatever this generation is, of people that, you can cook a steak outside or inside. You can do that 2 or 3 times a week. And guess what? It's as good or maybe even better than you'll get at most restaurants. The retail price of beef is not, in fact, it's the same or less on a lot of the major cuts than a year ago. Ribeye, loin, strips, they're all competitive with a year ago. So if we tell the consumer this stuff's awful high, they'll believe it. Not all of them, but a lot of them will, in my opinion. That hasn't slowed anybody down from getting an $8 cup of coffee at Starbucks or wherever you like. I mean, is that high? I'd say yes, but I don't know. Obviously the market's part psychological. That break in the stock market yesterday didn't help the team at all. I guess I look at CPI and being a novice, I'm kind of going like, well, gosh, look at the energy prices. Look at what you're paying for gas. That's not as high as it used to be. Look at corn and beans. So there are some components of that inflation stuff that if you got boots on, drive past the dealer, car dealer, and see if he's got all his 23 pickups sold. They don't.
No.
I mean, that, so there's some stuff going on that, things have slowed down. So hopefully this government doesn't wait too long to let the let a little leash loose here again on this interest rate deal and crawl that thing back down before it's too late. But yeah, I'm not an economist. I'm just an old cattle guy.
All right. Well, speaking of cattle, guys, it is now time to start focusing on getting those grills out. Let's start with Valentine's Day. Let's move some more proteins across the meat counter and help out when we can.
I'm buying my wife a steak tonight. So there you go. Let's get her going.
All right. Sounds good. Best way for folks to get a hold of you, Brad?
Websites, kkvtrading.com or 712-722-0023. Thank you, Susan.
Thank you. That's been this week's Cattle Call. As always, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call on the Rural Radio Network.